Hello everyone, Jesse Webb, TradersPro. Markets got beat up a little bit yesterday. The Fed needs to stop talking or get things under control. It just really is affecting the markets a lot. Nonetheless, what they're dealing with, inflation, if it gets out of control, ultimately that would be a can of worms that they do not want to let open. It'd be even tougher for them, I think, to get things under control. So they talked about more interest rate hikes, so markets obviously don't like higher interest rates, so they sold off a bit. We'll look at the chart here. Long-term trend, we're mildly in a bear market, mildly bearish in a bear market, and all that means is that our momentum in the short term is back up into this range. We would get back into the bullish in a bear market if we ticked up into this upper range, but that's just not happening yet. So, and we know that the bear market piece of that is from this long-term indicator, and that is showing here and here. So we're definitely trending in the right direction, and this chopping pattern certainly could be a bottoming process. It's just not fun to go through, and as the markets are deciding which direction they ultimately want to go, we've just been dealing with this long sideways pattern. Really now, looking back to where we're at now, this was a year ago. So we just about have done nothing for the most part for the last year. Some extremes along the way, but we're basically back to where we started last year. So, and I think that would define a lot of our experience in the markets, you as well, that we're just treading water, a lot of ups and downs, lots of volatility, and not a whole lot of production. Although we're definitely seeing, pockets of stocks that are working, and those are the ones that we want to talk about and focus on. So buy-sell ratio in the shorter term here, we saw it tick back up again as well. Here's our middle of the line threshold. This can become a bias. You can use this as a bias in terms of what direction I want to be focusing on my trades or my lack of trades. If you want to just be sitting in cash during these, when we're on this bearish side of the trend, that certainly works as well. Sentiment, saw that little bounce up and then move back down again. Going back to that buy-sell ratio, this is more normal. This would have been less normal for it to just come back down. This is more normal where we have this come up and then come back down, kind of like this right here, at least, or even this, if we're going to be working on more of a bearish trend right here. We'll see how that ends up panning out. If we look at S&P 500, we saw, just that ugly bar yesterday here, and we're now going to be looking at trying to hold support right here. If that fails, obviously next stop is going to be support levels right here. If that, even another down day today would probably move this hold signal back into this sell. That would give us that full red bearish profile that starts to happen here, especially with that long-term downtrend. It's a little precarious at these levels. So all that means is just to be a little bit more cautious in the size of the positions, the number of trades that you take on, because we want a good solid, to be really aggressive bullishly, we want all green across the S&P 500, and that's just not happening. And it's probably a little bit of time before that will happen, although this long-term trend is easing its way back up, and that's what we want to see. We talked about a wall of worry yesterday, and that's kind of a mentally frustrating part of investing and trading to go through, is to look for opportunities when all the discussion is so negative. Let's take a look at some of the new buys here. We've got TERN, biomed stock, with a nice little move. We've got IBEX, also a decent little pattern, kind of a pre-breakout type pattern. Lots of green fundamentals there as well, so interesting play. When you can pull up the chart and just glance and see that almost everything is green, you're early into that trend, and you've got a lot of positive fundamentals. Annual EPS up 115%. Last quarter EPS up 93%. The recent quarter 9%. As far as sales, decent fundamentals. At least they're making money, right? And so, and it's got a real strong uptrend. So that's that's just a quick glance of the fundamentals. That's why we put those on there, is because ultimately fundamentals do drive the stock price, but it's not the main reason why, because investors are looking out into the future. So the current fundamentals don't matter as much as what the projected fundamentals are. But if they're trending in the right direction, then typically they will continue to trend that way until it stops, until it doesn't work. And that's kind of the idea behind a momentum style of investing, is keep doing what's working until it stops working. Our RBBN, nice little pop here. In fact, I really like this chart technically because of this formation right here. When you have this uptrend, counter trend, retesting, okay, this resistance area has now become support, and you get a confirmation bar right there. That makes for a nice risk profile. I can set a stop loss right at this low. I'm risking essentially that one bar of movement that happened yesterday. If it continues to move higher, great. If it drops and moves back below that location, then I know that I need to get out of that and move along to something different. Okay, there's nothing personal. There's nothing. I don't need to be mad at myself, the stock, nothing. It's just simply, here's my entry, here's my stop loss. If it goes below this, I'm going to exit and I'm going to move on to something different. It's just a line in the sand so that you don't run into situations where it's like, well, is it going to bounce? Is it going to bounce? Is it going to bounce? Well, maybe I'll buy more because it's low. Well, is it going to bounce? Maybe I should buy more. Okay, we don't want to deal with that situation. We want to create a hard line in the sand and say, no, I'm not interested in this possibility. By holding on to it in a downturn, I'm going to sell it. I'm going to cut my losses. I'm going to look for something else. I'm going to try to get on a different stock, and maybe the next stock looks more like this. Okay, and it does work, and it does continue higher. That's kind of the nature of investing and trading. It's more of the nature of trading, obviously. Investing is for really long term. I'm buying the business. I'm buying the entire idea of the business, and price volatility doesn't matter nearly as much in that situation. Okay, one other thing that I wanted to look at was gold. If we take a look at sector ETFs, it's more of the commodities location though. Take a look at the most recent day. We saw silver, gold, oil. We saw a lot of these commodities really just getting pummeled. Oil dropped. That was not what I wanted to look at though. I wanted to look at this gold chart because you do have this bearish profile, at least in the shorter term. The longer term is also still down just from the long term that had moved down in the past. And so interesting, it was really working to try and had this little counter trend, some support levels right here. We'll see what happens. One of the triggers that I looked at was, if you go to the new buys on the site here, you've got bearish direction on real estate. You can also go down here and scan for the new buys, and then you also have, I'm just going to refresh this so that I can pull in the right information. Then the ETF new buys, real estate, but then you have dust, which is a 2x bearish gold miners. So as gold is dropping, you're starting to see the miners also dropping, which this is an inverse 2x, so the negative 2x, which means that if gold mining stocks drop, then this ETF will go up by 2 times that drop. So this is actually a way to be able to trade, be long something bearish, even though it's going up when the opposite asset that you're against is moving down. Okay, so you don't have to be short, you don't have to use put options, you can actually be long one of these inverse ETFs, and there's a couple of them that are in there today, which is interesting. This is another one, just a different company, decent looking bearish pattern. So we'll see, we'll see if gold holds up. I think the long-term chart of gold actually looks really good, so these may be shorter term moves. If you don't have full access to the site, you can sign up with the link below, and we look forward to having you. Have a great day today.